Bitcoin, congrats on your ETF. It's done very well. You're number 3 now?
Number 3. This was David against Goliath. And, so this is a very nice win for us. Now, we're not finished. And in fact, in our business, what's interesting is the wirehouses, which dominate our customers. So Morgan Stanley, all the advisors at these wirehouses, Morgan Stanley, UBS, Merrill Lynch at B of A, Wells Fargo, not one of them has approved Bitcoin on its platform. That hasn't even happened yet. And those are our primary clients. When that happens, wait until you see.
Explosion. And the institutions coming on, and then governments following. The ship has sailed.
Yes, it has. And this is not just a technology. It's a new asset class, right? And beyond that, it's a global monetary system. It is the first global, private, meaning no government oversight, digital and decentralized, rules-based. That's the most important word here. Rules-based monetary system in history. It's a big idea. We did something called Bitcoin Brainstorm. We do a Bitcoin brainstorm monthly, and one of them was the convergence between Bitcoin and AI. And we had, you'll probably know of his developer name, Roast Beef, from the Lightning Network on, and he was talking about how in Africa already this convergence is redefining division of labor. The gig economy we understand here in the United States, put that on steroids in terms of micro gig economy in the emerging markets, and you have a whole new kind of economy. So yes, very exciting. Well, we have all kinds of metrics, but when I was at Abundance, the forecast was, our bull case was $1.5 million in 5 years. So that would have been 2027. We still have time. And we still think that's going to be right. If you just look at the institutional push into Bitcoin, this new asset class, they have to consider it as fiduciaries. When you use those code words, new asset class, what it means, the correlation of these returns are very low compared to those of other assets.
Especially as bonds and stocks are becoming more correlated, you need something uncorrelated.
Yes, absolutely. And so they have to consider it. Now, what are we saying? There are 19.6 million Bitcoin out there right now, and the highest it will ever go is 21 million. There's real scarcity value. And what is going to happen? The price increase for every institutional dollar pushing in now is going to be much higher than it was last year, 2 years ago. It's, we're going to get into, if these institutions really want to own it, what I found fascinating recently, just learned it this morning, is typically when you go through a price move, a Bitcoin price move to the upside, you usually see long-term holders, which is a metric we monitor. It's an on-chain analytics metric. And it means people who have not moved, or wallets that have not moved their Bitcoin in 155 days or more. Yes. Well, normally when you go through a price move to the upside, a very nice one like we've seen in the last year, that tends to start moving down. And it did that, true to form, but it has reversed in recent days because what we learned is GBTC sold some of its Bitcoin. So those wallets hadn't been changed in a long time, right? Now that is done, at least for the time being. Now that is done, And it's going back up again as the price goes up. That's highly unusual. And I think it is because the long-term holder is saying, why would I sell now when I know all these institutions, which own nothing in this realm, in this new asset class, they have to consider it because it is a new asset class. And so yes, we're very excited about the Ethereum network and Solana. And so they all play different roles. And what I love is there's kind of a little competition. I think competition is always good to keep the other networks honest. Yeah, when we did our digital wallet work, we're saying, okay, let's try to figure out how many steps it takes for a merchant or for a consumer to pay a merchant. And that was 9 steps, including the 2 of them. And that's, and there are many other middlemen, but these were the most direct steps. And that is a 2 to 4% tax on every purchase in the world if you're using intermediaries, credit cards, and so forth. So just think about that. Cutting, that tax rate dramatically is going to increase access dramatically. Yes. And so here is the question there that we're getting all the time. Is this a bubble? And the way we are answering it is, no, this is not a bubble. There's something profound going on.
Was electricity a bubble?
Exactly,
Right?
exactly. Now, is there too much capital chasing the same thing? That could be. I can tell you, we've had and the headlines. I'm not saying anything that you don't know, but we have been pulling away from NVIDIA mostly because we see how well understood that story is, and it is. And all praise to Jensen Huang and his incredible team. They have done so much of the heavy lifting as we've evolved to this level. Now, however, the companies in our portfolio that are hugely undervalued and not recognized for what AI is going to enable are those with deep domain expertise, and especially in one of your favorite areas, Peter, the multi-omics space. So deep domain expertise, AI expertise, take this seriously. This is going to determine winners and losers, good distribution, whether alone or with partners. And then finally, most important, harnessing that proprietary data that a company has that nobody else has.
Thank you for joining us today on this insightful journey into the world of crypto and investing. If you found value in today's discussion and want to stay updated on future crypto news and market insights, don't forget to hit subscribe button below and click the notification bell. By subscribing, you'll be part of our growing community, gaining exclusive access to timely analyses and strategies. I look forward to having you with us in the next video.